Right, traders, welcome back to the channel. Here we have a very anticipated new style video I'm doing, just kind of experimenting with PowerPoint and stuff. But I'm going to be introducing a topic today which is super powerful, and it's something which you can implement in your own trading as well. So it's essentially using the concept of order flow with ICT. And what do I now mean by order flow, right? So what is order flow? So order flow itself is understanding the interaction between buyers and sellers at key levels, right? We're going to be understanding what we mean by an aggressive participant versus a passive participant at key levels. And we're going to be using things like volume, delta, and finished versus unfinished auctions at key levels. Notice how I've underlined and really highlighted the word key levels, because everything comes down to essentially bullish POIs and bearish POIs, understanding supply and demand zones, and understanding the basics of where we look for price action and how we determine who is in control. So from here now, let's introduce the concept of a footprint chart. So a footprint chart, as you can see on your screen, is quite simply a depiction, right? So here we have a bearish footprint chart, for example. This is, sorry, a bearish candle, and on the right, we have a bearish footprint chart, right? So what we need to understand is that a footprint chart gives us detailed information, which, as you can see, a candlestick, sorry, does not. What we understand is we have numbers on the left and we have numbers on the right. So for basic knowledge, what people should understand is that you have a bid, which is on the left, and you have the ask, which is on the right, right? So again, before we move on to that and come into some more detail, we need to understand everything in terms of supply and demand zones, right? So these are essentially key levels, supply and demand zones, right? So what you see here is a supply and demand zone, right? So what we're looking for is we're looking for the interaction between buyers and sellers at these key levels, right? So let's start here with understanding the ask and the bid, right? So the ask and the bid itself, if I make this a bit clearer, the ask and the bid itself represent two very important things, right? Traders who hit the bid are aggressive sellers. Traders who hit the ask are aggressive buyers. So if I go back to this um, image over here where we look at what the footprint chart is. So when you see those green rectangles to the top over here, when you see the green rectangles over here, what this represents is that you have aggressive buying, which means that when we go back to here, when we have aggressive buying, what that means is you have more people hitting the ask than the bid, right? So more people hit the ask than the bid, right? So that's aggressive buying, right? So this is aggressive buying, right? You see a 0 and a 17. That represents zero market participants hit the bid, sorry. So that's zero aggressive sellers, and you have 17 at the top. 17, it says that 17 market participants hit the buy, which means overall that particular transaction was aggressive buying, right? If you go down to the bottom of the candle, you see the opposite, where you see these red rectangles. And when you have a red rectangle, what that means again is that you have aggressive selling. So you have more traders hitting the bid than the ask, right? So you have aggressive selling. And when you see a red rectangle over here, that means the net difference was negative, right? So ask minus bid is a negative number, hence why easy to understand. It is depicted with a red rectangle in this case. The buyers at the top, the aggressive buyers, are depicted with a green rectangle, which represents aggressive buying. So there's more traders hitting the ask in that case, right? So that's aggressive participants. Passive participants are quite interesting, and this is essentially understanding the backbones towards about supply and demand, right? So you have aggressive participants and you have passive participants, and it's going to be I'm going to explain that when we go on the charts. What I mean by passive buying and sellers is, right, passive buyers versus passive sellers. Now the delta is probably one of the most important things, if not the most important thing, when it comes to understanding footprint charts. So you have a negative delta, which represents that more traders hit the bid than the ask, and vice versa. When you have a positive delta, that means that more traders hit the ask than the bid. And you're going to see this a lot. And the delta profile is essentially depicted through this image over here. So we're going to be going over this in a lot of detail as I go into the chart. So stick with me through the end of this video. We're going to go on and we're going to understand a live case study, a buy trade on the S&P 500 cash index, and we're going to be understanding how you can trade SPY or S&P 500 or ES. They're all essentially the S&P 500. How you can use footprint charts to your advantage, right? And everything comes back down to these numbers on the screen, right? So the numbers represent, again, the left is aggressive selling. Those are market participants hitting the bid, right? The right is aggressive buying. So you have more market participants hitting the ask than the bid, hence why you see aggressive buying at the top depicted in green. And at the bottom, you see it's more red. You see more red rectangles, which represents more traders, more market participants hitting the bid than the ask, right? So this is essentially a massive auction between only two types of participants, buyers and sellers. And there's two types of buyers, i.e. aggressive and passive. And there's two types of sellers, i.e. aggressive and passive. And we're going to understand what passive market participants are in a bit, right? So once we have our delta out the way, the next thing we're going to look at is volume, and this chart, this slide indicates everything else that you need to know as well. So, volume is essentially it indicates where most of the transaction and the overall activity happened for a specific candle. So, if we understand this candle, we had a decent amount of volume at the top, even though the body here is bearish, right? This is a bearish body over here. This is a bearish candle, right? So, this candle is this candle over here. Overall, it's a bearish candle, but the footprint chart gives you indications which you can only really get from a footprint chart, right? So it's important to understand that when you have a down candle, it's very interesting because you had a lot of aggressive buying up here, and a large proportion of the volume occurred at the top part of the candle, right? Notice how the largest amount of volume for this candle also corresponded to the most aggressive buying. So even though it's a down candle, you understand there's aggressive buying towards the top, which is something that simply a candlestick chart cannot really show you. That it is the interaction between buyers and sellers, the aggressive nature of buyers and sellers, and understanding things like volume that can really give you an edge, especially on those lower time frames. So what we look for at key levels is understanding who is aggressive, and then number two, who is passive, and where that is happening. Essentially, where it's happening refers to the title of the slide, which is at key levels, so areas of supply and demand, right? Once you have your aggressive and passive market participants understood, we then go on to understanding the delta, which does actually explain number one and two as well. Understanding how delta changes at key levels gives you an indication as to who is aggressive and who is passive, and that further validates an area of supply or area of demand. And the last thing we're going to be looking at, specifically with the numbers, is understanding finished versus unfinished auction, and that's something I'm going to go on to as we go on to the charts. So here now on the charts, we have the S&P 500. This is the 5-minute time frame. So if I just zoom in a little bit. Now, this is the 6th of August 2024, and now this is the 5-minute time frame of the S&P 500. So what I've done is I've rewinded price back to just before 9 o'clock Eastern time, right? So this candle is now 2 p.m. UK time, which corresponds to 9 a.m. Eastern time. So this is half an hour before the market opened. So from here now, if I continue to play price on, understanding the basics of SMC and ICT, right? All of this stuff can be used together if you use it responsibly and accurately, right? So what we have over here, just looking at things from a basic kind of ICT perspective, we understand market structure. So this is our most recent swing low in orange. This is our swing high. The reason why this is our most recent swing high is because understand how price tried to drive price down, right? And this is important. I want people to understand this as well. Understand the nature of candlesticks as we are studying them alongside footprint charts, right? So this here represents a liquidity sweep. The reason why this is a sweep of liquidity for me and not a strong boss is because we haven't closed below. So this here is a sign for a Judas swing, right? Or an ICT Judas swing, or simply the low of the day, right? Just from an ICT perspective, right? So from here now, when it comes to identifying supply and demand zones, what we need to understand is simply a supply zone. In this case, we're looking at a supply zone because we're looking for a flip from supply to demand. And the way you want to understand this is that once you've taken a candle like this is our candle. This is now going to be our key level. So what makes a key level? Good question, right? What makes a key level? So I want to see a key level essentially drive price lower, and from an ICT perspective, I want to see price leave an inefficiency, right? So this is a fair value gap, but this is an imbalance. Right? A lot of people who follow my channel understand that fair value gaps are essentially a massive backbone as to how we trade at Liquid FX. So once you have that in place, from here now, we're essentially now going to engage. We're going to understand the auction between buyers and sellers on the 1-minute chart. Now, as we now get into our key level over here, the candlestick chart, when you zoom into it, doesn't really tell you anything about the interaction between buyers and sellers, right? So as price is kind of fighting in this key level, so if we understand how price does eventually come into this key level, right? So price does eventually come in. We don't know what's happening over here. As each candle progresses up and eventually breaks the demand zone, sorry, the supply zone as price does, we don't actually know what's happening, right? So I'm going to introduce people to the idea of using footprint charts, right? So footprint charts themselves, again, we have footprint charts over here. Now notice how we have the same key level that's marked out, right? We have the same key level that we're looking for a potential buy. Now this is the exact same key level. Let's head down to the 1 minute chart. So now that we're on the 1 minute chart, what you can see is the same exact price action. But when I zoom into this over here, we get opened up to quite a new world of price, which you can't get from, a regular candlestick chart, right? And we're going to break this down and we're going to break this down, sorry, and understand the interaction between buyers and sellers, right? So we understand things in terms of the delta, in terms of volume, in terms of the overall transactions, right? So again, remember what I said, right? Let's see this. We have a positive strong delta over here, strong delta coming down below, strong delta. So coming into this supply zone, we have a lot of aggressive buying. That's also backed up with the fact that we have some volume. We've got strong volume in this candle, and we also have the majority of the buying itself, the aggressive buying up here, right? So just to give people some context, as price came into this zone, we understand there's this wick over here, right? So this is kind of like you get this kind of rejection, if you like, this wick from a rejection. But when we actually further dive into this candle, what we understand is that the majority of what does this candle actually tell us? The majority of the volume occurred where the wick occurred, and we have a lot of aggressive buying at the top, right? Now from here, the buying starts to slow down. We start to get aggressive selling. Now here's where things get very interesting, right? Where you can see how prices now started to come down from this supply, and we understand aggressive sellers kick in at this level, right? So from here now, the volume kicks up towards the bottom and we see aggressive selling towards the bottom of the candle. We do have some aggressive buying, but we see aggressive selling, right? Down here as well, we see 0 and 16, right? 14 and 0, right? So when we see a 0 on the right represents the ask. Remember that. The right represents the ask. And the thing to understand is that when you have 0 market participants hitting the ask, that means you have no aggressive buying. You only have aggressive selling. If you look at this candle over here, what's very interesting is that you have a red candle over here, right? So this now is a red candle. This is I believe this is 10 a.m. Eastern time, right? So this candle over here, this 10 a.m. Eastern candle, if we just zoom into this candle and look at what's happening from an order flow perspective, from a footprint perspective, we understand that this candle here had a lot of its volume down here towards the bottom, and the majority of the volume was actually aggressive selling. The reason you can see aggressive selling is, yes, you can read the actual footprint chart itself, and you can read the fact that it's 391 by 233, 91 by 34, 319 by 107. So you can see that the volume is high at the bottom, but you can also see with the red over here that aggressive sellers were active at this zone, right? Aggressive sellers were being active. And the most interesting thing I want people to understand now is that these aggressive sellers, despite all of their effort to push the market down, price ultimately broke through this zone, right? Price broke through this zone, as you can see, right? So this is what validates our demand zone, right? Think about this. We're at a demand zone, right? Let's just go back to the chart itself. When we're at a demand zone like this, let's see this, right? When you're at a demand zone like this, and you see aggressive buyers coming in, and you see the aggressive sellers kick in and try to push price down, right? So you had aggressive sellers in this region over here. This is where sellers were incredibly aggressive, as you can see with the footprint chart, right? Sellers were very aggressive at this point, right? So again, this is this price action over here. Sellers were very aggressive over here, very aggressive over here. This is what I'm trying to show you. When the market has aggressive sellers and they're not being rewarded, and this ends up happening, what's actually happening over here? So let's just understand. Here you have a negative delta, right? So delta here is negative, right? Delta here, I'm just going to write N for short. Negative delta over here. And then eventually you see buyers step in over here. So you see aggressive buyers step into the market over here, right? Aggressive buyers, eventually go on to break this zone, you have aggressive buyers, right? So this now indicates that this is a key level that we want to be potentially monitoring and paying attention to. Excellent. So now as price comes back down into this key level, right? So we've understood we have aggressive selling that hasn't been rewarded. So remember what I said about the supply zone? The supply zone was over here. This was the supply zone that tried to push price down. So just intuitively, guys, I want people to understand this. When price does come into a supply zone and tries to push price down, so you see the aggressive selling actually fail, this is an indication that this is now what we call a supply to demand flip zone, because you're seeing those interactions, you're seeing those aggressive sellers actually fail in the market, which is one of the most important things to understand. Now from here, another thing I want people to really understand and depict from this is a couple of things, right? So when price comes to retest this demand zone over here, this new key level, which we're now looking for demand, what I want people to understand is that as price comes into this demand, we see the exact same thing where the majority of the volume is down here, and the majority of it corresponds to a negative delta. So a negative delta again represents aggressive selling, and notice how the aggressive selling is eventually overtaken by the aggressive buying. And when I spoke about finished versus unfinished auction, this is what I'm talking about. A finished auction, just for basic knowledge, a finished auction is when there's a zero on one side of the market, right? So in this case, we have a zero over here. So we have 4 and 0. In this case, we have 15 and 0. We have 2 and 0. We have 30 and 38 and 0. And then we eventually have 9 and 0, right? So when you see a high and low in the movement, so when you see this kind of price action, when you see the tip price action over here, which is what we're looking at, now, this high and low, in this case, this kind of low in the movement was actually validated by a finished auction, let alone buyers, aggressive sellers, sorry, not being rewarded, right? So this is what validates the supply zone itself, right? So what actually happened? If I play price on, what we saw over here at around, I think this was 10:15 Eastern time, AM Eastern time, what we've seen over here is we've seen aggressive sellers that haven't been rewarded, right? So you see failing aggressive sellers, right? This is failing aggressive sellers, hence why we see a negative delta. And we see a finished auction, right? So the way you want to look at a finished auction, so this is a finished auction. And the way you want to understand a finished auction is that buyers and sellers have kind of agreed to, you can essentially see it as an argument that's kind of ended, right? Think of it as an argument or an auction between buyers and sellers. When you see a zero, it represents that that argument has ended and price is now willing to move in a certain direction. And how do we identify that direction? Is from using the aggressiveness of sellers and buyers. Understand aggressive sellers have not been rewarded, and this is where passive buyers step in, right? So when you see aggressive sellers in this case, right? When you see aggressive sellers try to push price down and fail, the passive buyers are coming into this region, this same key level, and driving price higher, right? So this is where the passive buyers step in, right? And understanding that there's a lack of activity at this level, there's a lack of selling that's being rewarded despite their aggressiveness, right? So this is where we take advantage of a potential buy trade, right? So on the 1 minute chart again, this is what validates a key demand level, right? So this is now an entry, stop loss just below the level. And again, remember our basic ICT concepts. Where do we target as a minimum, right? So this trade didn't run all the way to the moon, which is fine. But we have some Asian liquidity over here. This is the Asian range high, right? So this is the Asian range high. ARH, Asian range high. So we understand just from basic ICT concepts that a target that we want to look for in the markets is just above this Asian range high, as price often does sweep the Asian range low and then the Asian range high. So it's a very systematic trade in that way. You can't really go wrong with your take profits. Yes, it's a 1-to-2 trade. It's not the biggest R multiple in the world, but it's certainly acceptable when it comes to understanding the overall order flow, right? So again, order flow price does eventually tap into our entry at about 10:30 Eastern time. And eventually, after some time, we eventually hit our overall target, which is the Asian range high, right? So this is a quick breakdown of a trade using footprint charts, right? So understanding the interaction between buyers and sellers, finished versus unfinished auctions, and just going back to our PowerPoint. Again, everything comes back to key levels, right? So what does the key levels represent? Who is aggressive? And more importantly, once you have who is aggressive, who is passive, you then want to understand who is in control. That can be found out through things like delta, through volume, and through finished versus unfinished auctions, right? So this is a quick overview as to how you can combine ICT concepts with order flow and supply and demand.